Hi guys, welcome to the Saving Money Show with me, your host Sean. I apologise for any background noise. We are outside again. It stopped raining, so I thought, why not? Anyway, let's get on with the show. The markets have been green for a second day. Everyone's saying buy, buy, buy. We're going to be looking at the markets, at some stocks, and some market sentiment. We're going to be looking at the pros, the cons, whether we should be buying or selling. Now, first, a bit of news. Apple will stop using Intel chips by 2021. But something that hasn't come out is that Apple is going to stop using them in all their devices. It hasn't been reported on yet, but they're bringing that date forward. And Apple are testing their chips against Intel chips. If it turns out Apple chips are better, then this could be the blockbuster moment for Intel. If you think about it, I said before, the one thing that Intel had going for it was Mobileye. Well, they're getting contracts from the likes of Ford and that, and don't forget, Ford are a bit behind the game when it comes to this technology stuff. Now, I would have forgiven them for being a year or two behind with a 7mm nano chip if they were ahead with other things. They're making sales with the computers, their laptops at the moment because of the situation. They were still selling chips to other companies, but then you had losing Apple as a supplier. What will happen? Apple will start selling their chips to other suppliers. So Intel is going to lose out big time. Now we hear Neo is considering getting rid of Mobileye for their own program, in-house program. We've heard this before. It could be a negotiating tactic. And to tell the truth, I think the reason they didn't bring manufacturing in-house last time was because they were offered the 5-year contract by the government. I think after then, Neo will bring manufacturing in-house. That's another bullish feature for Neo. So then they will be losing revenue from because it makes sense to bring everything in-house, but it will cost a lot of money up front. But all that money that you're saving from using government property, government funds, you can build up and you can invest in these facilities. Now, we have a takeover, a merger, prospective merger happening as well. Huawei and Douye, I hope I've probably crucified those names, supposed to be in talks about merging, because the company that owns a large percentage of each, Tencent, they're a Chinese Goliath. They want to streamline things and bring them both together. In my mind, they both look the same. They both tend to do the same. I think Huawei are undervalued at the moment, and I expected them to something to happen with them in the forms of a merger or being bought out completely. But with do you they will merge and give a special dividend of 19 cents a share if it does come to fruition. Now, that is all the things I could dig up on that, because nothing's actually been confirmed, and even that information hasn't been confirmed. So don't come back at me if that is wrong, please, because it is just speculation. Guys, welcome to the Savvy Money Show with me, your host Sean. If you want to help support the channel, don't forget to smash that lovely like button, and don't forget to hit the bell notification if you want to be reminded of when a video gets uploaded. And why not smash the sexy subscribe button? A lot sexier than me, just ask the wife. And because I upload multiple times a day. And while you're at it, why not comment in the comment box down below? I'm also putting a load of free links in the description box. Why not check them out? And if you're looking for a free trading platform on which to trade your stocks and shares, why not check out Free Trade Trading with 212 and Stake? You get a free share worth up to £200 or dollars for signing up and depositing a small amount. So now we can see there's been a dip here, and we've had a second green day, which makes people think, right, we have people who have said, I'm going to wait till this date to get in, and I'm thinking, why would you wait? Because why would you set a date? I know you are thinking this is going to happen, but if everyone's thinking the same thing, you should make price points for your companies, and then if it drops even further, you average down. That's what I did. I was told I was stupid for selling my Amazon at 3,440, but then when it hit 3,000, I picked up more. If it goes further, I'll pick up more. You know, you set a date, it could end up coming back to what you sold at, or it could end up coming back to what it was originally. That's why it shouldn't be a date, it should be a price point. Now, the thing is, people are thinking it's going to be a contested election. There's been bombs in electoral postal bins. They think there's going to be riots. Now, to look at that, there was already a legal challenge, and but that was quickly quashed in Texas. So I don't think it's going to be as bad as people think. There may be riots, but I think the legal system will be prepared for this. The other thing is, with Google Trends, which told us 4 weeks ago that the Roni was getting worse, we have that at a 90-day high. So that shows us it's getting even worse than it was 4 weeks ago. And with winter coming, it's no surprise. Now, the other thing, if you look at insider buying sentiment, insider buying sentiment is low. When you look at March, April time, insider buying was bigger than retail buying. That, along with it, Fed was what was pushing stocks back up. You know, not us with our £100, £1,000 investment, but the insiders with their £1 million. Yeah, and the institutions. But these guys are staying out. I get that institutions like ARK Invest are going in, but they will be going in a lot more if there was insider buying, showing faith in the company. Now, this, as you see here, could be classed as a correction. We know that it was oversold. We know there was issues and should have been a sell-off, but we know that it was oversold, so it could be classed as a correction, a bull trap. It's only been 2 days, but at the same time, you never know. You might be getting in at the bottom. So no one can tell you one way or the other for sure. For instance, all people can tell you is that no matter who is president, the market will go up in the long term. In the short term, there will be turmoil. The difference the president will make to a market will be sectors. For instance, Biden will be good for EV, Trump will be good for the oil and gas sector and coal. You know, all those sort of things come into play. You know, people think that Biden will cause disruption because of his tax plan. I do not think he will implement it straight away, because he will want these big people to start spending to kickstart the economy. But whoever wins over the long term, the market always goes up. You will have these crashes, you will have these dips. You have to choose the companies you like and decide a price point. No one can tell you any different with any conviction. Now, also remember, if it does continue to go down, spec stocks are the ones that sell off first. You can get them cheap now, yes, but they are the first ones to sell off. So come up with a game plan, find the ones you want. If you're getting the blue chip stocks at a price point you like, then great. For instance, Tesla under 400 was a great deal. I was waiting for it to hit 350 because I'd already gotten a position in Tesla under 400. So now you have to make your price points. You have to be happy with it and do your own research. But what you don't want to do is catch a falling knife. What you don't want to do is miss out because you're waiting for a certain date and then end up with another bull run. No one can tell you for certain if there's going to be a bull run or if it's going to go down again. Because no one can tell you if there's going to be a lockdown or not. There's lockdowns across Europe, and it looks like there may be one in America, but you can hedge against that, and I've done videos on that in the past, so maybe check them out. But what you need to do is make sure you're comfortable with your position. Don't over leverage yourself. Don't take margin to start buying in at the moment. Start trying to free up some of your debts and margin so that you're in a secure place. Anyway, that's all from today. See you in the next video.